Hi, I'm James Leichter. Does your HVAC company sell factory extended warranties? If you do, you could be losing a lot of money if you're not careful. To explain why, we need to examine a basic service call. Let's say we have a service call for $500. Cost of goods sold, $250. Gross profit, $250. Let's say in this example we have overhead of $200. That gives us a net profit of $50 or 10%. Not much can go wrong with this service call and you're losing money. You've only got a $50 profit to mess around with. Anything beyond $50, you could be losing money on this service call. Let's say your street rate for labor is $250 an hour. If you charge 10% less than that, then you could be losing money on that service call. If the factory isn't paying you your street rate, then you are almost certainly losing money unless you have an extremely high net profit. If your net profit is 10% at $250 an hour, you can't afford to get paid $100 an hour from the factory and still make money on that service call. You have to factor that in when you're selling the extended warranty. So how do you do that? You first think about how many hours you might need to service that extended warranty. Let's say you determine 25 hours. You want to make sure that you're charging the difference between your street rate and the rate that the factory is paying you to cover the lost opportunity. You want to charge for the extended warranty. You want to build that into the price of the installation. Again, to do that, you're thinking about what you would have normally charged at a 10% net profit, for example, minus what the factory is going to pay you. You have to make up the difference, and that's the amount that you will add to the installation to cover the lost opportunity. I also recommend that you create a warranty fund reserve. You set aside that money and use it later to make up the difference. For example, you have an installation where you add $500 for the extended warranty. Put that warranty money in escrow, in essence. You don't have to set up a separate bank account for it. This would be a bookkeeping maneuver. Set aside the $500. When you run a service call under warranty, use part of that $500 to make up the difference between what you would have charged and what the factory ends up paying you. You can add a discount item to get you down to the factory amount. In other words, price out the invoice as you normally would, discount it down to what the factory is going to pay you, and then add to that from your warranty fund to make up the difference. That way, your service department will properly report net profit and it won't take a hit based on something that benefited the install department. Otherwise, your installs look more profitable than they really are, and your service calls look less profitable than they really are. This is the only fair way to handle that expense. Let's wrap up what we've talked about here. Let's say you are a 10% net profit company in the service department. If you get 10% less for that service call, you have broken even. If you get 11% less for that service call, you've lost 1%. If the factory is paying you 70% of your street rate, then you are losing approximately 20% on those service calls. That's not fair to the install department, which looks more profitable than it really is, and it's not fair to the service department that looks less profitable than it really is. So what do you do about it? You put the difference in escrow. You determine what your burden is to cover that warranty. You charge for that, and through a bookkeeping maneuver or an accounting adjustment, you put that money aside and you draw from it to make up the difference. When you create your invoice, you price it out normally. You then discount it down to whatever the factory is going to pay you. The difference is made up from the escrow account, and that's how you can properly report service department income and installation department income. Thank you for watching. I'm James Leichter on behalf of Aptora. If you're interested in more videos like this, we've left links down below. Feel free to subscribe and hit that like. We'd really appreciate it. See you in the next video.